Welcome everyone to HueFin, also known as HueFin News. Today is April the 12th, 2021. We're going to do a look back performance on some stock picks that Sven Carlin, you guys can see this is his YouTube channel right here. He picked a couple of stocks back in 2018 as well as 2017 as recommendation as to these stocks appreciating in price in the long term. So we're going to look at the performance of these three stocks. And as always, there's nothing against these YouTubers at all. We're just simply trying to create a space that we can actually document the performance of the stock picks that they represent on their videos. All right, so you guys can see that these are the two videos right here that Sven Carlin has done. The first one, which is right here, stocks to buy January 2018, was on Seku. That was one stock that he talked about on this video, that he was expecting the market to go higher in price in the long term. The second video that we're going to look at, which has two stocks, which is going to be Skechers and Whirlpool, he talked about on this video right here, three stocks that I'm buying now, August 2017. So you guys can see that these videos are still posted on YouTube. Now, the premise is that many YouTubers expect is that you hold these stocks for the long term, i.e., a year, 3 years, 5 years, 10 years, 15 years, under the premise, under the expectation that these stocks will appreciate gradually over time. So when we look at the performance of these three stocks that he recommended back in 2017 and 2018, keep that in mind. Okay, so let's go ahead and look at the performance of those three stocks right here. And you all can see that this is it. This is the look back. We're going to look at the performance of Sven Carlin on those two videos, to which he mentioned Skechers, Whirlpool, and Seku. You guys can see the logos right here on the right side of this report. So now, visually, you guys can see that this is the returns that you would have had if you would have purchased these three stocks. Now, the Seku he recommended, or that video was posted on YouTube on January 14, 2018. That was a Saturday, so I had to go back the previous trading day and take the close price of Seku back on January the 13th, 2018, which the price was $10.74. The current price of that stock is now $2.51, which is a negative loss of 76.63%. You guys can see right here. Now, in the first 7 days, you were up 7.17% in that particular stock. In the 30-day, your return would have been 24.77. 90 days into you taking that recommendations from Sven would have been 6.7%. Those were your three opportunities for you to at least grab some profits out the market. And ever since then, this market has completely fell off the cliff. On your purchase year to date, if you were to purchase a year out from when you purchased this stock or when he recommended it, you would have been down 16%. 3-year return, you're down 73.37%, right? What about Skechers? Skechers was recommended on July 31st, 2017. You were already off the bat in 7 days of that issuance, down 1%. 30-day return, you'll be down 7%. This is the greatest opportunity for you to come in and take the profit into the market when he recommended Skechers. 90-day return, you were up 17, almost 18%. That is massive. That is very good to see, because following the year-to-date return, you're still down negative 1%. And then the Skechers on the 3-year return, you're finally seeing some gains, 5%. So from 2017 to right here on the 3-year total return, you're still only up 5%. So the opportunity cost of your money being in Skechers for 3 years, you can only get at best 5.13%. When in 90 days, you could have got 17. See, the premise is for us to see these stocks appreciate in value. And these two stocks that we're already showing you has not done that. It has been very volatile. It has been 1 year, you're up. Next year, you're down. It hasn't been appreciating gradually the longer you hold out. That is something that we need to make sure when we try to hold these stocks in the long term. There's no guarantee that these stocks will appreciate. Let's look at this last one, Whirlpool. So you can see right here, even in Whirlpool, 7-day return was the only time that you had at least a minimal amount of profitability right there at a 0.3% right there. Ever since then, 30-day down 5%, 90-day down 9%, year-to-date down 26%. 3-year return, you're still down 8.36% on that particular recommendation of Whirlpool that he did on that video back in July 31st, 2017. So you also can see right here as a numerical number of what has occurred into the market for those 3 stocks right here. Okay. Now, this is what the market is doing right now for those 3 stocks. Okay. So you can already tell the close price as of last Friday in Seacool was $2.51. The date he recommended it, it was at $10.74, which translates over into a percentage change of 76.63% loss on that particular pick or recommendation that he talked about on that video. What about Skechers? Skechers was trading at $28.09 on July 31st. Now, that same stock is worth $43.17, which translates over into 53.68% profitability. Now, the question is, do you need to take the profit off of this one, or are you going to risk holding the market for the next 5-10 years? Because guaranteed that market number, this percentage change, is not going to be what it is right now. So at what point would you come in and take the profit out the market? Because right now is the prime opportunity to at least evaluate that. I mean, you're up 53.68% from when you first purchased this stock back in July 2017. What about the last one, Whirlpool? Whirlpool was trading at $177.88. Last trade price, it was at $236.99, which gives us an increase of 33.25. So those 2 stocks, we are seeing gains right now. Now, you're risking holding or losing those gains the longer that you go out in time, because as you can see up here on this top chart, it's a lot of volatility. Fluctuations consistently happen within the stock market, and there's no guarantee that these percentage gains for these 2 stocks will still be there. So at what point would you come in and take the profits out the market? This is one thing that many people don't realize when they try to hold on for stocks for the long term, is that there's no guarantee that these stocks will increase in percentage gains consistently or appreciate in value the longer you hold them. There's no guarantee of that. As you all can see right here, the majority of the 3 stocks that he recommended, the 7-day, 30-day, 60, 90, the year-to-date, the 3-year return, are all negatives. Majority of them are seeing some negative gains. And as you can see right here, Seacool, the profit was made in the very initial stages of you purchasing the stock. The longer that you held out on that particular stock, you definitely increase your losses. What about Whirlpool? Whirlpool is off and on. 7-day you're positive, 30-day you're negative, 60-day you're positive, 90-day you're negative, year-to-date you're negative, and a 3-year return you're negative. So the question is, you need to understand as to when to take profit or when to hold. This is the performance of those 3 stocks that he recommended. You guys can tell that those videos are still posted, so we're not hiding anything from you. This is just simply us looking back at the performance of these picks that these YouTubers have created. We just want to see their performance. And if they are doing an excellent job, then we'll definitely put these on these charts. And when they're not doing so good, you will see that as well, unbiasedly. All right, so now, if you all want to see more of this content, again, before you head out, make sure you hit the like button, share the video, and also subscribe here to the channel. Tap that bell notification. You guys want to make sure that you stay updated on our own stock price prediction that we are creating here for the markets. We definitely appreciate your time. And again, make sure you return back to make sure you stay updated on any price movement that we are seeing. Make sure you maintain a profitability. And as always, trade different.